Hi everyone, in this video we're going to talk about Crispr Therapeutics, a gene editing company focuses on developing transformative gene-based medicine for serious human disease. Full information should not consider as investment advice. The site rewarding this company by the revenue is forecast to grow over 80% per year. But unfortunately, there's risks. Currently unprofitable and not forecasted to become profitable over the next 3 years. Shareholders have been diluted in the past year. And as you can see chart, it raised pretty well since the last, for example, capital raising and also earnings update. And year to date, you could be profited over 180% of the return. And 1 year return 155%, of course, huge numbers, beating the industry and the market. But a long-term price volatility, it's on the highest level compared, for example, industry and the average market. Valuation side, it's influential data by the tip ranks, ranking the stock price target 136, so there's almost 33% downside, which is not so good. Good news for investors that may actually think to buy the stock, but anyway, the 12-month forecast in good scenarios 180, average pretty much the same price, and low 45, and future growth forecasted 26.5%, hugely. And also earnings per share growth forecasting, as you can see, it would become profitable in the end of year 2024. Past performance decreased, annually earning growth decreased by 11%. Financial health side, we see here that the good news is the company is debt free, but and also the equity is raising. Currently they're not paying dividends, and on the insider trading side we see here that there was only sold insiders, so there's two companies, Veru Venture and Bayer companies, that have sold the company in this year, January and September and also December. And as we can see, top shareholders have been, so there's a lot of movements going on, so almost everybody from top shareholders have been increased or decreased. For example, the biggest I see here, BlackRock, added almost 14%, and also Capital Research added over 1000%. And in Simple Safe Dividends, we see that the earnings per share are on the minus side, and the shares outstanding have been increased, which is not so good for investors, but for company, if they want to expand, they could possibly cover the expansions by putting more stocks to the market. Total sales have also been decreased, and the last 12 months it's 77 million compared to last year's almost 300. Anyway, the stock went up pretty much $6 per share, 3.26%. It's pre-market 5.64. Anyway, the investing.com summarizing the stock for long-term investors as a strong buy. Thanks for watching this video. Subscribe to the channel, like the video, and see you in a future one.